Good morning, Sir John Piper with the weekend video clip, and it's Saturday the 5th of November. I thought I'd start with a chart of the euro today. The euro crisis rambles on. Partly it's sort of brinkmanship, I think. Partly it's the politicians just don't know what to do. I mean, I think it is a King Canute process. They're sitting in front of the tides, and what can you do? But part of it also goes to self-interest, politics, general sort of thing. So basically, we're going to get this brinkmanship, which of course creates huge bargaining opportunities for the right people. Lehman Brothers found that it doesn't always work too well because they were left to go under because they'd engaged in brinkmanship. I mean, they could have been bought out by Barclays. I think it was Barclays. Some weeks beforehand, they chose not to do so, going for a better deal, and the result was they no longer exist. This will happen, I think, or at least not quite the extreme, perhaps, so far as Europe is concerned. Well, I'm sure it won't be as extreme, but there'll come a time when there will be a crisis that goes unresolved, and then markets will fall back. The problem is timing this. It's really, really difficult to time it and decide when it's going to happen. So I thought the euro is a good place to start because we have got it's not 100% clear, to say the least, but we have got this possible 5-wave advance to there, ABC, then a thrust up, then there's rather another ABC, which may now be over, in fact. And so we've now seen some solid buying, and this looks corrective. I'll have a look at that now. So here is the rally up, pretty impulsive. Here is an ABC decline, which forms wave A. We then got a wave B, which is another ABC. And we've now got a C wave, which ends in quite a solid buying spike. And we've got a solid buying spike there. So it looks like the euro could be about to take off. Whether we'll see much opportunity next week to get on that, I just don't know. It depends on what happens. Often these things happen over the weekend. But for those of you looking to take some action on Forex, then there's good reference points, which means stop points, below 1155 and below 116. You want to leave it a space for violent news-driven action, which is what we're seeing all the time. But the euro now looks like a buy. If we see the right action on Monday, and it may be early on, the market are 24 hours, they start up before you might start up, but that's one to look out for next week. I will make formal recommendations if we see the right kind of setup, but in these markets, it's really a trader's market. You need to be looking at what's going on and going for it. So that's looking positive. Of course, I'm talking about the pound euro. This is pound euro, so I'm talking about the pound going up, the euro going down. So as this is the euro falling. Consolidation, bounced back a bit, but now we've got a setup. Only came in last thing yesterday, so it's not like it's old news. This is brand new. But the euro could be set for a much bigger fall next week. Let's go back to that daily. Basically, if this is a 1, and that's a 2. This is another 1 and a 2. Then this could be the acceleration phase. So 1.20 euros to the pound is something of a minimum. I'd have thought we could see a lot more than that. We could see quite a slump in the euro next week. At least that's the way the chart is looking. Let's have a look at Footsie. Okay, the basic pattern is I think we'll go from here: A, B, C, A, B, C, and the question is this peak now in? Okay, that's the key question during the week. There's certainly a case here that we have seen 5 waves down. 1, 2, 3, 4, 5. Not a hugely clear 5 waves down, but the Fibonacci level, which is the blue dotted line there, it just poked its head above there and fell back, which is a negative. ABC is sort of fairly clear. ABC, A, B, C. I'll go down to a shorter range chart. Okay, on Footsie, the peak came in here. Fibonacci level is here. Only had an ABC really at the moment. ABC. A, B, C. So nothing too dramatic there. I mean, it's you know, the setup is clear. It's a nice clear setup. Fibonacci retracement has worked well. Market's fallen back, but this isn't ideal as far as Footsie is concerned. Sometimes the first moves aren't that clear, but I wouldn't be surprised to see us fall away come Monday. And again, if we see early selling from the right kind of levels on Monday, then I'll be going short, and alerts will be going out. But again, if we see fast action, then you might get much better prices by looking at it yourself and making your own decisions about what you should and shouldn't do. DAX. Okay, here's the daily chart. We've got the 5-wave decline. We've cut that really down to there. A, B, C, B, and now this rally up to here. It can be kind of different. I mean, it could be from there, and it could be 5 waves from there. With the 4 there and the 5. Basically, we've got a peak between the 50% and 61.8% resistance. Go down the shorter term. So looking at the bigger chart, the 50% level is there. So that can count as a false break above there. We then saw 5 waves down. So we've got a much clearer pattern on the DAX, in fact. Notice this huge gap here, starting from there down to there. This rally closed the gap. It hit the 61.8% level and failed to get above it, which is another critical point. So let's see what the pattern is of this decline. Okay, well, we've got clearly impulsive move there. This is an indeterminate move. It could even be a 5. It could be a failure, in fact, but we'll call it a 2. Then we've got 1, 2, and then we've got a whole load of waves here. I think 1, 2, 1, 2, 3, 4, and then 5. This is probably a 4th wave. With a 5th wave due and maybe a few more 5th waves coming in. I mentioned my extreme, this idea of putting stop below extremes. This is something I'm sort of experimenting with at the moment. It's working pretty well. I mean, I put some stops below. Let's see when I put some stops. I think they were below there initially, so the market went straight through there, and then I put some stops below 6100. So I got triggered there. This nearly stopped me out, but didn't, in fact. This is a risk with this system that you're going to get volatile action, but the position got me in to that. This is short-term trading tactics. I plan to do a video on this actually, and a manual on this, because it's quite an interesting system, especially where you got this sort of fast moves coming in, because the risk is always low. You define your own risk by putting in a protective stop. If you catch a decent move, then you get 100 points, 300 points, and it's a very easy system to operate, because you just put position on, so you put your stop in place to enter. Market goes through the stop, keeps going. You may not even be aware of it because you may be doing something else, but the system is working for you. You've got your protective stop in place once you enter, so you're protected as per your definition of what you want to risk. So it's something. If someone's interested in this if somebody would like to do this sort of stuff and isn't quite sure how to do it, then please give me a ring. I'm happy to spend a bit of time. I haven't got time is at a premium, but I'm always happy to help people who want some help. Let's see. So again, it looks like we may not see that much more. I mean, it looks like this could be wave 5. So it might be we're going to have to see another rally before much happens. But again, given the fact we were in this news-dominated environment, then and there's bound to be news over the weekend, so it's difficult to know what might happen. But again, some strong selling on Monday will be a good sign to go short. And also we've got good solid reference points up here. Okay, so it's 200 points higher now than the market. But that's again, the volatility forces that issue. The Dow is slightly different. We have this. I count that as a B wave failure. So I think that's so A, B, C. It's a regular B wave. Bill Adler counts as different. He counts as a 5-wave decline. I mean, obviously you can see 5 waves down. It's just the form of this thing here. It looks to me like a B wave, but obviously these things are open to interpretation. If we now look at this C wave, as I call it, Bill will count it differently. Let's have a look at that. We can see it as complete, but only if we count this little thing there as a 1, then perhaps a 2, maybe it's the regular 4. Sorry, I'm not 1, 2, 3, regular 4. Then we've got the 5 waves up, very clear 5 waves here, which could be the end of this. So it could be a complete 5, although not a great count. We then go to the shorter term count to see the subsequent decline. We have a fairly clear 1, 2, 1, 2, 3, 4, 5. That's wave 3, 4. Then a rather truncated fifth. That did make a new low, but only just. Now we've got A, B, and C. Followed by this decline. This again to go down another level. Not much to go on here really. I mean that could be impulsive. This could also be impulsive actually. You've got 1, 2, 3, 4, 5. But there's this A, B here. Not so clear on the Dow. The Dow seems a little bit stronger. It's rallied more. It's not falling off as fast. But then it's outside Europe, I guess. Okay, have a quick look at gold before we finish. I thought we might have peaked on gold, but so I mean this is an A. This counts nice as a B, but it's heading for that 61.8%. I said that was an important level, and it's heading that way. Let's have a quick look at the form. Well, Monday could be crucial for gold too, in fact, because if we have this, that's a 3, 4. Here's the Fibonacci level, and that would be a good failed break, whatever, above 1770 or thereabouts, 1771, 1772. Yeah, could well be the signal that the B wave's over and that the C wave decline has begun. How that would tie in with continued euro weakness, I'm not quite sure. I guess because the dollar might strengthen in comparison, that could drive gold lower. Well, it will obviously a rising dollar would tend to have that effect in any case without any sort of particular action on gold's behalf, as it were. Anyway, that's all for today. I hope you found it interesting and useful. Quite a lot happening next week. Could be particularly interesting. And I may well be in touch. So next report is on Tuesday morning, but there may well be a special report on Monday, if not some alerts, depending on what's going on. But it's the kind of day when you may want to watch the screen somewhat more than usual, and perhaps want to start somewhat earlier than usual. Anyway, have a great weekend. Thanks again. I'll speak to you again soon. Bye bye.